Welcome back to the deep dive. I want you to picture something for a second. It's, say, 11:00 p.m. You're in bed, the lights are out, but your face has that soft blue glow from your phone. You're not texting, you're not scrolling social media. You are staring at a six-bedroom Tuscan villa in a state you don't even live in with a price tag you will definitely never earn.
The Zillow doom scroll.
Ah,
It's a modern pastime. I think SNL did a whole sketch on it.
they did. It's our generation's window shopping, fantasy football, but for houses.
Right.
But today, we are not here for the fantasy. We're here to strip the drywall off the company behind the window. We are doing a deep dive into Zillow Group. Specifically, we're unpacking their fourth quarter and full year 2025 financial results. They just dropped yesterday, February 10th, 2026.
And it's a big moment for them. It's their 20th anniversary this year.
20 years of estimates, 20 years of arguing with your spouse about what your neighbor's house is actually worth.
It's a cultural institution at this point.
It is. But our mission for today, looking at this report, is to solve a puzzle that just doesn't make sense on paper.
Okay.
How does a real estate company grow its revenue by double digits? We're talking 18% in Q4, when the actual residential real estate market is basically frozen.
That is the central mystery, isn't it? The housing market is sluggish, just kind of stuck. But Zillow is sprinting.
It feels like such a comeback. I mean, you remember a few years ago, the whole narrative around Zillow was, well, it was shaky. They had that iBuying disaster.
Oh, I remember. The house flipping experiment?
Yeah.
Buying high, selling low. It was a very dark chapter for them.
Exactly. But this report, the whole vibe is just different. It's confident.
It is. And to really get that confidence, you have to understand this theme I've been seeing, a kind of market decoupling.
Market decoupling. It sounds like something you'd hear in therapy.
In a way, it is a breakup. Zillow has managed to break up with the broader housing economy. Usually, if people aren't buying homes, a company like this bleeds cash.
Right, it's a direct line.
But they found a way to monetize the waiting. They're making money even when their users are just, sitting on their hands.
That's the magic trick. So let's start with the hard numbers. Let's dig into this financial turnaround. The headline number is pretty loud.
It's very loud. For the fourth quarter of 2025, Zillow brought in $654 million in revenue.
And that's up 18% from last year.
18%. And for the full year, it was $2.6 billion, up 16%. Those are gross stock numbers for a company that's 20 years old.
Right. But, revenue is vanity, profit is sanity, and this is where the story gets really interesting.
It does, because if you go back just 1 year, Q4 of 2024, Zillow lost $52 million.
Just gone.
Gone. Fast forward to this report. For Q4 2025, they posted a GAAP net income of $3 million.
Okay, hang on. I have to play devil's advocate here. I saw that number and I paused. $3 million on almost $700 million in revenue.
Yeah.
That's a margin of what? Less than 0.5%? It feels like a rounding error. Why should we be impressed by that?
It's a totally fair pushback. In isolation, yeah, it's pocket change.
Yeah.
But you have to look at the trajectory. It is huge because it represents operating leverage.
Meaning what exactly?
It means they've proven they can cover all their massive costs, thousands of engineers, the servers, all the AI compute, and still finish in the black.
So it's the difference between a business that's burning cash to survive and one that's actually self-sustaining?
Exactly. It's a proof of concept profit. And if you look at the number Wall Street really cares about, adjusted EBITDA.
Let's pause there. Define that for anyone listening who isn't a CFO.
Sure. It's basically how much raw cash the business generated before you pay taxes, banks, or do complex accounting stuff. It's the pure power of the engine.
And that number was?
$149 million in the quarter.
Okay, now that is a much bigger number than $3 million.
It is. And it's up 33% from the year before. So their cash-generating engine is revving really, really high.
And speaking of cash, I noticed something in the report that felt like a real flex. The stock buybacks.
Yes. They have about $1.3 billion in cash just sitting there. And in Q4 alone, they spent $232 million of it buying back their own stock.
Buying back 3.4 million shares.
Yeah. And think about what that says. Companies don't do that if they think the ship is sinking. They do it when they think the market is undervaluing them. It's a statement of confidence.
So the bleeding stopped. They've turned the corner. But let's get to the real how is this possible moment of this deep dive, the part about outperforming the industry.
This is my favorite stat in the whole letter. Just defies logic.
So according to the National Association of Realtors, the NAR, the entire residential real estate industry grew by only 3% in Q4.
3%, which with inflation is basically flat. The market stood still.
But Zillow's revenue grew 18%.
That's a massive gap. In finance terms, they outperform the industry by 1,500 basis points.
Which is a lot.
It's 15 full percentage points. That is not a small margin. It's absolute domination.
So how, if you're listening, you're thinking, Zillow makes money when houses sell. If people aren't buying more houses, how is Zillow making so much more money?
Well, it's about market share and take rate. Imagine the pie isn't getting any bigger, but Zillow is just taking a much, much bigger slice of that same pie every quarter.
They're monetizing their existing users more effectively.
Way more effectively. They've built a boat that can sail even when there's no wind.
And to understand how, we have to look at the engines. Because it's not just selling ads to agents anymore, is it?
Not at all. And that brings us to the growth engines.
And the first one, honestly, it surprised me. Because I always think of Zillow as being for buying a home. But the standout star here is rentals.
The sleeping giant, or I guess the giant that just woke up.
The numbers are explosive. Rentals revenue is up 45% year over year, $168 million.
45% growth in a mature business is. That's hyper growth. It's almost unheard of.
And specifically, multifamily revenue. So big apartment buildings, that grew 63%.
And that tells you a story about the American economy.
Right.
Right? Why is rentals revenue booming?
Because no one can afford to buy a house.
Exactly. The housing affordability crisis.
Right.
Rates are still high, prices are high, people are stuck renting.
So Zillow just pivots and says, fine, if you can't buy a house on our app, we will help you rent an apartment instead.
They're capitalizing on the waiting room of homeownership. The American dream is delayed, and Zillow monetizes that delay. And they're being aggressive about it. Did you see that note about Redfin?
I did. It was buried in the cash flow section. An initial payment in connection with the Redfin Rentals partnership for $100 million.
$100 million, just to partner. It means they're consolidating the market, paying a competitor to essentially use their engine. They want to own the entire rental funnel.
It's a huge bet that the near future is renting, not buying.
A massive bet.
Okay, so rentals is booming because people can't buy. That makes sense. But then I looked at the mortgages segment and I got confused all over again.
Why is that?
Because their mortgages revenue is up 39%. And their purchase loan volume, the actual money they lent, skyrocketed 67% to $1.5 billion.
It's a startling number.
But you just said the market is frozen, and the report says the industry's purchase mortgage volume was roughly flat. So how is Zillow growing by 67% when no one else is?
This is the aha moment about their strategy. The market for mortgages is cold, sure, but Zillow is thawing out its own corner of it through integration.
So walk me through that. How does that actually work for a user?
Okay, so in the old days, you'd find a house on Zillow. You love it. Then you close the app and call your local bank for a loan. Zillow just lost you.
Right. They did the window shopping part, but lost the sale.
Now, they are intercepting that moment. They're saying, like the house, great, click this button and we'll fund it for you right now. They're turning browsers into borrowers before you even think about calling a bank.
So they're capturing the financing just by being the first screen you look at.
It's a capture rate play. And 67% growth proves it's working. It's like Amazon's one-click button, but for a $500,000 mortgage.
It really validates this whole super app idea they keep talking about, which I guess brings us to the strategy. The CEO, Jeremy Waxman, he's not subtle about it.
No, he's all in on the housing super app.
He's talking about industry-leading software and 2 decades of AI innovation. It sounds like buzzwords, but the numbers seem to back it up.
The goal is to digitize the entire journey. Buying, selling, renting, financing. They want to be the operating system for moving, the Apple of real estate.
And they have the audience to do it. 221 million monthly users, up 8%.
The traffic is just staggering. 2.1 billion visits in a single quarter.
But here's the key math for me. Users up 8%. Revenue up 18%.
There's that efficiency again.
They are squeezing more money out of every single person who visits the site.
Precisely. In the past, you'd visit 50 times and they'd make, 10 cents. Now they're making 15 cents because they nudged you toward a rental application or a mortgage pre-approval.
And they mention AI as the driver. 2 decades of AI innovation.
Yeah, and for them, it's not just a buzzword. Do you remember the Zestimate? That was one of the first consumer AI products ever.
That's a good point. We were all obsessing over that before we even knew what machine learning was.
And now they're likely using AI to predict user intent. They can probably tell from how you scrolled if you're just dreaming or if you're actually about to buy.
And if the AI thinks you're serious, it serves you a mortgage ad. If it thinks you're broke, it serves you a rental ad.
It's a little dystopian, but
Yeah.
highly effective.
Okay, so it all sounds incredibly rosy, but this is a deep dive. We have to look at the potential storm clouds, the risks.
The risk factors section. My favorite part of any shareholder letter. It's where the lawyers get to be creative.
What's the biggest thing that could derail this train?
Well, the obvious macro stuff. Inflation, interest rates. If rates spike to 9%, even Zillow's clever mortgage funnel hits a brick wall. Affordability is the big threat they can't control.
Right. But there was something in there about the rules of the game changing. It mentioned changes to rules promulgated by National Association of Realtors.
That's the elephant in the room.
Yeah.
The massive lawsuits over agent commissions.
The standard 6% commission is under attack.
It is. And if buyer agent commissions disappear or drop, a lot of those agents could go out of business. And if they go out of business, they stop buying ads on Zillow.
And their premier agent business is still a huge chunk of their revenue.
It's a massive regulatory risk. If the industry shifts away from agents, Zillow loses its main customer. They have to pivot to the consumer, which, to be fair, they are doing.
So they're hedging against the death of the real estate agent.
Or at least the diminishing of the real estate agent.
I also saw a really interesting one about AI. It wasn't just AI is hard. It was a risk that others could copy, infringe upon, or develop similar intellectual property.
The copycat threat. Yeah, that's fascinating. In the old days, you needed 20 years of data to build a Zillow.
Now, a startup with a powerful AI could scrape public data and build a pretty good competitor in a month.
That is the existential question. Zillow is betting that they will be the AI you ask. But if they're not, they're in trouble.
And one last risk that felt very 2026. Climate change.
Yes, the impact of natural disasters on housing.
Insurance costs are just skyrocketing in places like Florida, California.
And if a home becomes uninsurable, it becomes unsellable. If it's unsellable, you don't need Zillow. It's a long-term risk to their entire market.
It's heavy stuff. But for now, looking at this Q4 report, Zillow is navigating the chaos better than anyone.
They're playing their hand incredibly well.
Okay, let's wrap this up. What are the key takeaways for you if you're listening to this?
I think it's three things. Pillar one, financial stability. They stop burning cash. They're a grown-up company now.
Pillar 2.
Massive outperformance. The housing market is flat. Zillow is up 18%. They have decoupled their success from the economy's transaction volume.
And Pillar 3.
The super app strategy is real. Rentals up 45%. Mortgages up 39%. It proves they can make money across the entire journey. They're becoming the Amazon of home.
And why this matters to you is because it signals a fundamental shift. We're moving into an era where the platform, the digital middleman, is becoming as powerful as the market itself.
The digital gatekeeper is winning, even in a flat market.
Zillow has positioned itself so that whether you buy, sell, or are forced to rent, they get a cut.
It's a perfect hedge against the American dream. If the dream works, they sell you mortgage. If it's on hold, they rent you an apartment.
It's cynical but brilliant business.
It's strictly business. And it is working.
So here's the final thought I want to leave you with. We just saw Zillow grow rentals by 45% and mortgages by 39% in a dead market.
Right.
A flat year.
So what happens if the market actually recovers? What if rates drop in 2026 and transaction volume spikes?
That is the multi-billion-dollar question.
Do they just become a monopoly on the entire moving process? If they're winning this big in a bad market, does a good market make them too powerful? And if that happens, does all that regulatory risk we talked about, the antitrust scrutiny, suddenly become their biggest threat? Success invites scrutiny.
Success invites scrutiny. I like that. Something to chew on the next time you're doom scrolling at midnight.
You can check the show notes if you want to read the full shareholder letter. It's got some great charts.
Thanks for diving in with us. We'll see you on the next one.
Goodbye.